Hey, good afternoon, everybody. Matt Thomas here from Compass and the Altitude Group with Brian Dewald, Dewald and Associates and Fairway Independent Mortgage. Brian, how are you?
Great. How are you? Good to see you.
Great, man. Did you have a good Fourth?
It was awesome. How about you?
Epic.
Yeah.
It's just an epic. It's just the ultimate. I think it's the ultimate holiday. It's so fun. It's just
great.
And I think people are, united. I think we all need to be. I think people are united in a cause for the most part. It's just awesome to see people being patriotic and just celebrating and doing summer things. So it's cool.
Yeah.
It was great.
It's fun.
Great time.
Yeah. Nice.
Very good. Brian, we were just talking before we started recording here. We've seen a good half month of rate improvements.
Yes.
There's been a little change in that today, but for the most part, we've actually seen quite a bit of improvement. You want to tell us about that?
Yeah. So, like you mentioned, today's been a little bumpy. I'm going to pull up a chart here and I'll show you shortly. But basically, since the Fed meeting, and again, I'll kind of echo what we've talked about in the past. When the Fed raised interest rates, it's not. Remember, the Fed isn't raising mortgage rates; they're raising their short-term rates. That was a bigger hit than the mortgage industry had anticipated, which created bonds to rally. When bonds rally, it's good for mortgage rates. So anyway, we've had a pretty good stretch here. I'm going to pull this up and show you. This is over the last 6 months. So let me kind of bounce around here. I'm going to go share and do my tab. And we'll pull that up here. So this is a snapshot of mortgage prices, not necessarily mortgage rates, but mortgage prices over the last 6 months. Prices have decreased over the last 6 months, which has made rates gone up. I'm going to toggle in kind of ish right around here. I'm not sure this is going to show up in the video, but this was about mid-June. And I don't know if it'll show up on the video, as far as we're
going to find out if we need to. We can. That's cool. We'll mess with it afterwards.
Yeah.
But
okay. Anyway, it's pretty easy to see red and green. Red is bad. Green is good. So middle of June, we started seeing a bunch of green. There's one tiny little blip of red in there that didn't last long, and we kept seeing more and more green, which causes the bond market to improve. That's what those green marks are, and that's what we can kind of see on the right side, where it's going higher. That's good news for mortgage rates. This morning, and it's just the ebbs and flows of mortgage prices. We're down about 62 basis points. That fluctuates a little bit from minute to minute. We always talk about, having price changes throughout the day sometimes. So prices were released this morning. Rates were released. We had a price change kind of midday or so, which meant rates got a little worse. So, but overall, it's still super good news from where it was a couple of weeks ago, because we're down. Mortgage rates have improved almost a full % in the last couple of weeks.
Yeah.
It's been a really good rally. So I'm gonna go ahead and turn the share on.
Yeah, I think everyone got alarmed when we heard that rates were in the sixes.
Yep.
The good news is they're not in the sixes. At least again, and it always depends on what each individual qualifies for. Right. But they're now in the low to mid fives, right? So roughly, which is great. And it's also the reason I say it every week. It's the reason we're doing this every single week. If you're paying attention to the real estate market, and especially what mortgages are doing, mortgage rates, you want to be apprised of this so that you can make the best decision for you. If timing is important to you, sometimes the timing is just, hey, I got to buy a house this summer, and whenever that happens, it happens, because you also have to have the right property, right? But when it comes down to, hey, the timing on the mortgage, if that's, especially if it's critical for what you can afford, if you're kind of on the borderline of what's affordable, you want to pay attention to when we're seeing basically these improvements, like you said, were indicated in the green, and that's you need to be plugged in so that you can get information right away to say, hey, this might be my weekend to buy a house because of rates improving or whatever. So. Now, Brian, you mentioned also that this type of volatility, however, is just kind of what we're going to expect for a while. I mean, we're going to see some ups, we're going to see some downs.
Correct.
Right. We've been on a trend of rate improvement, with the exception of today. Hopefully, it doesn't trend back the other way, but the trend has been positive.
Yep.
And the change has been more on a daily basis at this point. So
agreed.
But throughout the summer, it'll probably do this. That's kind of what we're expecting?
Well, what's interesting is that,
calming down.
Yeah, this happens pretty often. A lot of times we don't see massive swings like this. I mean, if I go back to that chart, it's a pretty good swing from where we were a couple of weeks ago. That's not all that common. So I'm hoping we mentioned when we first started this, the mortgage industry would really love to see some stability to avoid all these crazy things we hear and talk about, margin calls and all these crazy things, which put a lot of stress on mortgage companies. So anyway, a little bit of stability would be great. If we can and kind of hang on to where we are and possibly improve a little bit and kind of continue on that path little by little, it would be great. So we'll just have to see what happens. Everything that's moving right now, whether it's up or down, is all in relation to, inflation and anti-inflation and potential for recession and stuff. So we're seeing a lot of that, those comments and things come through that are relative to mortgage prices. Okay.
Now, the Fed is not scheduled to meet again until when?
You got me on the spot. I'd have to look at the date. I don't know.
Okay.
I want to say it's sometime either July or August. But I have to look at
it. And I'd heard somewhere that July 13th is that a date that you are aware of? Not for the Fed, but I believe there's consumer price index numbers coming out or something like that. Do you know? Is there significance for the 13th?
I mean, it's literally anything that affects mortgage prices almost happens daily, to be honest with you. So it could be, whether it's a jobs report or GDP or, you name it, we're seeing something usually 2, 3, 4 times a week. So July 13th isn't anything that sticks out from memory, but that doesn't mean there could be a large report that gets released. Okay, well, fair enough. So we'll just, I guess that'll be our cliffhanger for the week. Make sure you tune in next week to find out what the latest is. July 13th would be a month or a week, from today. And we usually like to shoot these on a Tuesday or Wednesday. So we'll be keeping you apprised as always. Please do subscribe to this channel to stay connected. Please do call myself or call Brian, especially if you're concerned about mortgage rates. Brian is a phenomenal lender. It's the reason I have him on here, and it's why we're doing this, to make sure that you are connected to a premier lender in the area so that you don't get misled if you need to know exactly what's going on in real estate and mortgages this summer. Sounds good, Brian. Anything else? That's it for now. Good to see you. Thanks so much. Appreciate your time. You got it. Yeah, absolutely. Appreciate your time. We'll talk next week. And again, as always, just reach out to us and stay connected. Sounds great. Take care, guys.